We all know that real estate has a history of appreciating in value, making it an enticing option for newbie investors. Unfortunately, no investment is entirely without risk. And if you're new to the world of real estate investing and seeking a low-risk opportunity to kickstart your portfolio, you've come to the right place. We are about to reveal the 5 safest real estate investments for beginners. By considering these strategies, without a doubt, you will lower the risk of losing money in the long run. Now, if you're ready to get started, let's get down to business. Number 5. REITs. Here's the good news I want you to know. REITs are no longer limited to the wealthy elite. Some REITs now welcome non-accredited investors with as little as $1,000, providing an incredible opportunity to participate in an industry that was once exclusive. Seasoned REIT managers are experts in assessing property value, identifying potential for growth, and estimating future returns, giving you a good idea of what to expect from your investment. One of the major advantages of investing in REITs is the uniform income stream they offer. By law, REITs must distribute at least 90% of your taxable income to shareholders as dividends. This means you can enjoy a regular and reliable source of income from your REIT investments. While REITs are generally considered safe investments, acknowledge that they still carry some level of risk. Market fluctuations, changes in interest rates, as well as economic conditions can impact the value of your investment. However, unlike traditional bank accounts, real estate is a fixed asset, making your investments more resilient against factors like inflation or financial crises. So how do you invest in REITs? I thought you'd never ask. But before that, please like and subscribe to the channel Life of the Landlord. Know that every week we upload new content related to real estate. Help us spread the video to more people by sharing it to others. And now let's start with understand a REIT and how it works. REIT stands for Real Estate Investment Trust, which is a company that owns, operates, or finances income-generating real estate. I suggest you learn about the structure, types of REITs, and how they generate returns to make informed investment decisions. Awareness of the risks associated with REIT investments. Like any investment, there are potential risks involved. Understand the risk factors specific to REITs and evaluate if you are comfortable with the level of risk involved. Reviewing the pros and cons of REITs. REITs offer benefits such as diversification, access to professional management, and regular income through dividends. Again, remember that they also have downsides, including the possibility of capital losses and limited control over property selection. Opening an account at a reputable brokerage. If you don't already have a brokerage account, choose a trusted and reliable brokerage that offers access to a variety of REIT options. Ensure that the brokerage provides a user-friendly platform, competitive fees, and comprehensive research tools. Research which REITs to buy and regularly monitor your investment. Analyze different REITs based on factors such as property type, geographic location, management track record, and financial performance. Continuously monitor your investment to stay informed about any updates or changes that may impact your decision. Number 4. Real estate mutual funds. With real estate mutual funds, you can enjoy the benefits of investing in a diversified portfolio of real estate assets, both commercial and residential. These funds are managed by professionals who carefully select and monitor the investments, taking the burden of property acquisition and management off your shoulders. The beauty of real estate mutual funds lies in their ability to offer attractive returns without the need for direct property ownership. Pooling your investments with other like-minded investors can help you gain access to a broader range of real estate properties and reduce the risk associated with investing in a single property. These funds provide a convenient and accessible way to participate in the real estate market, even for those with limited capital or expertise. You can start investing in real estate with as little as a few $100s, making it a viable option for beginners and seasoned investors alike. If you like to try real estate mutual funds, you can do this. Step 1. Determine your financial goals and risk tolerance. Are you investing for retirement, a down payment on a house, or a dream vacation? Assess your comfort level with risk to choose funds that align with your objectives. Step 2. Define your investment style. Passive funds track an index, while active funds are managed by professionals aiming to outperform the market. Consider your preferences and the fees associated with each option. Step 3. Get an estimate for the mutual fund investment budget. Determine how much you can comfortably invest on a regular basis to build your portfolio over time. Consistency is key. Number 4. Decide on a mutual fund type. There are various types available, including equity funds, bond funds, and balanced funds. Always put in consideration your investment goals and time horizon to select the most suitable options. Step 5. Choose the right brokerage. Look for reputable brokerages that offer a wide range of funds, competitive fees, and user-friendly platforms. Step 6. Manage your portfolio. Stay informed about market trends, monitor fund performance, and make adjustments as needed to keep your portfolio aligned with your goals. Number 3. Real estate crowdfunding. Real estate crowdfunding offers a unique and relatively safe way to invest in real estate. Through crowdfunding platforms, multiple investors can come together and pool their funds to invest in various real estate projects. This allows individual investors to access larger and more lucrative real estate opportunities that they may not have been able to afford on their own. What's great about real estate crowdfunding is that it provides a level playing field for investors of all backgrounds and budgets. It doesn't matter if you're a seasoned investor or a newbie in the real estate game, you can participate in existing projects and potentially reap the rewards. By joining forces with other investors, you can spread out the risk and diversify your real estate portfolio. And yes, crowdfunding platforms typically have strict due diligence processes in place to ensure that only quality projects are presented to potential investors. Curious how to start a real estate crowdfunding? No worries, I got you back. Step 1. Choose a platform. Avoid simple listing services and opt for platforms that act as broker-dealers. Look for platforms experienced in handling investments similar to your interests. Step 2. Ensure the platform has solid venture capital backing. As your investment may be locked up, trust the platform's credibility and stability. Step 3. Scrutinize the platform's due diligence process. Ask about the documentation they collect for potential deals and if they offer liabilities or indemnities to investors in case of unforeseen issues. Step 4. Assess the quality of customer service. As you research platforms and ask questions, gauge their willingness to provide the information and assurance you need. Number 2. House hacking. House hacking is a clever approach that involves renting out a room or a portion of your property while still living in it yourself. It's like being a landlord and a tenant all at once. This method allows you to maximize your profit potential while minimizing your risk. Renting out a portion of your property can aid in generating rental income that can help cover your mortgage or other housing expenses. This can significantly reduce your financial burden and even put some extra cash in your pocket. Believe me when I say that it's a great way to dip your toes into the rental business without diving headfirst into the deep end. House hacking is an excellent option for beginner investors because it allows you to learn the ropes of real estate investing while having a place to call home. You can gain valuable experience in property management, tenant relations, and even property appreciation, all while maintaining a comfortable living situation. If you'd like to know the process of house hacking, we have a separate video about this just for you. Just click the link on the screen. Number 1. Turnkey Properties. A turnkey property is one that is move-in ready, meaning it requires little to no renovation or repairs. Isn't that great? This saves you time, effort, and additional expenses that can come with fixing up a property. With a turnkey property, you can start generating rental income right away without the hassle of extensive renovations. Take my advice. Choosing a single unit property keeps things simple and manageable. You won't have to juggle multiple units or deal with complex property management tasks. It's a great way to ease into the world of real estate investing, especially if you're a beginner. Starting with a smaller and more affordable property will make it easier for you to minimize your financial exposure, meaning you have less to lose and can gain valuable experience without taking on significant risks. It's a smart strategy for those who want to test the waters and learn the ropes of real estate investment gradually. Bottom line, real estate has long been considered a reliable and potentially lucrative investment option, but I still want you to prioritize safety, especially when starting out. Don't forget that each option offers its unique benefits and considerations, allowing you to tailor your investment strategy to your goals and risk tolerance. So what investment did you enjoy most? Share your thoughts in the comments section below. Stay tuned to the channel for more insightful videos like this. Make sure to like as well as subscribe to the channel to stay updated with our latest content. In fact, if you want to learn exactly how to buy real estate without going to a bank or using your own cash, watch this video next where we'll tell you exactly how to get started. So click the video on the screen now and we'll see you in the next one.